meantime, now let's welcome in Jenny Horne, markets correspondent. Want to take a closer look at the Google story, what folks are saying now the day after. What stands out? Good morning, Jenny.
Well, a lot of the things that you mentioned off the top of the show, Nicole, and frankly, that's the fact that they're going to ramp up some of their spend as far as AI is concerned. I mean, their capex now expected to come in between 16 to 18 billion, which was higher than the 14 billion expected. More amazingly than that, though, was their plans to spend about 75 billion in capex in 2025 as they continue to expand on the AI strategy. But perhaps that ramp up in capital spend is not being perceived well, as we know that they have been punished in the past, as well as Microsoft has been punished in the past for that very high spend. But their overall revenue did rise 12% year over year. That was a slight downtick from the 13% pace of growth they saw in the same quarter a year ago. Their revenue growth, as well as growth for their search business, as well as their YouTube ads business and services unit, were all slower comparatively. So that advertising revenue growth was around 10.6% versus the 11% figure we saw a year ago. Search revenue growth was around 12.5%. Also a slight downtick, while YouTube ads revenue was around 13.8%, which was significantly below the 15.5% reported a year ago. Now, their CFO did say that they are right now seeing this technical infrastructure, with the largest component being their investment into servers, really followed by data centers to support their growth. But their fourth quarter net income did increase about 28%. There was definitely still plenty to like. Again, 12% growth is not anything to sort of scoff at, but when you're seeing signs of deceleration, just like what we saw in Microsoft with their Azure cloud coming in slightly below the pace of growth we saw last quarter, you get punished. So this is feeling very reminiscent of that move we saw post earnings in Microsoft last week, Nicole.
Yeah, and I'll add in, I mean, just the cloud story. So you did so much on the capex, a big part of the story that they're spending more than the analysts had anticipated. Also, the cloud numbers coming in 30% higher year over year, but it was a miss. In fact, 11.96 billion versus the estimate of 12.19 billion. CFO saying capacity limitations. And Ahmed Khan, who we spoke to yesterday, I saw him out this morning. He still has a price target of 237. Yesterday he was talking fair value 220. So it still sounds very positive. Thank you for all of that. Jenny Horne, great to see you. Thank you.